Monetary policy in Cody, Wyoming, 2:45 p.m. He, by the way, is a voting member. That's your Global Stock Watch, and it's available only on Worldwide Exchange.
Well, getting back to one of our top stories, the sell-off in China has subsided, with the Shanghai Composite booking a modest 0.2% gain. This after PBOC Deputy Governor Wu Xiaoling reassured investors that the government will keep their best interests in mind with market-friendly policies. For more, Nico Harachi, Managing Director, K1 Fund Distribution, joins us. Nico, good to have you here. Good to have you with us. First of all, when you look at these comments coming off of this central bank officials coming out from China, do you get a sense that the government is worried that the fall in the stock market has gone too far?
Well, first of all, thank you very much for having me here. And yes, I do think that the Chinese government were a little overwhelmed, I would say, by the measurements that the market took such a quick correction. I mean, but having said that it was a quick correction, you should also look at the market. I mean, we have seen this market gain more than 400% since the beginning of 2006. So, but I do, as I said, I think that at the moment they were a little surprised. But I do like that the Chinese regulators come out so quick and actually come out with comments in order to get the confidence up and running. And I think that you should keep in mind that this this increase of duty taxes was just one of three measurements. So the first one was the rate hike, where you didn't really see any corrections in the market. Then it was informing the banks to keep the deposit rates higher, and then obviously it was the this increase of duty tax that started the correction.
Nonetheless, we have rumors of a capital gains tax still causing some uncertainty in the Chinese market. Do you see the Chinese government coming out totally to squash the rumor, or do you think they're likely to leave the door open so it keeps investors a little bit more cautious?
Well, I do think, as you said, I think for them it's to keep the door open to see where the market is going in the next few months. But I mean, we have already seen yesterday and continuous today the Chinese market going up. I mean, yesterday we saw a lot of fund managers on the sidelines looking at the PE ratios going down to 25 for an estimated earnings for 2007 coming from 30 last week. So they saw this as a good buying opportunity. And coming back to the Chinese government, I mean, also yesterday they gave approval for 3 international major fund companies to launch new equity funds. So I think that should be comforting Chinese investors.
Nico, it's Michelle here in the United States. I see that you like telecom and banks. Is that China-specific, or is that region-wide in Asia?
Well, that is region-wide Asia. I mean, obviously in China, where we are seeing, we like all domestic-related demand sectors, such as properties, telecommunications, and cars. But we also like it in Japan. And also when it comes to the Japanese economy, we very much rely on the research material by capital partners. And they're also saying, as we agree on, that at the current stages with the yen, we should see great profits for all exporters.
Yeah, Nico, it's Ross here in London. Just picking up on the Japanese market. Nico, is still above 18,000 at the moment. Is it going to stay above that generally?
Well, that's a good question. That's hard to say. I mean, are we going to see a global correction or not? I mean, right now, obviously, we would not see the Japanese. I would not see the Japanese market go its own way as we're seeing the Chinese market. I think that the Japanese equity market is much more reliable on the global equity markets. And if we're seeing the growth as we're seeing right now in terms of the equity markets in the US and Europe, then I think we could stay that the Japanese equity market is much more reliable on the global equity markets. And if we're seeing the growth as we're seeing right now in terms of the equity markets in the US and Europe, then I think we could stay above 18,000. But we have to go back and also look at the US economy, who had not a very strong first quarter growth, only 0.6%. So let's see what's going to happen in second quarter.
What about corporate earnings in Japan, Nico? How supportive is it of the market at this level?
Well, I think the overall, I mean, we all know that the exporters play the biggest role of the Japanese economy, and having the yen at these levels, I think we will see corporate earnings coming in as expected, or even better than expected.
All right, Niku, thank you very much for being with us. Good talking to you. Niku Harachi, Managing Director, K1 Fund Distribution. Well, coming up next here on Worldwide Exchange, we'll be back to Frankfurt Live with the latest on the ECB rate decision. And later on in the show, American grocery chain Whole Foods opening its first store in the UK. Can it get a slice of the UK's highly competitive food sector? Find